What's up, YouTube? Listen, family, mortgage rates continue to climb. Some of them even as high as 7.5% to 8%. Let me know down in the comments below if you are in the market for a home, if you are a first-time home buyer looking to get in the market, and what are some of the challenges and barriers you guys are faced with. Guys, I got a jam-packed video for you on today, so please keep it live. We're going to bring out the charts towards the end of the video, but without further ado, make sure you help this video get at least 1,000 likes, and let's go ahead and dive into it. According to this article that just came out October 12th, mortgage rates continue to climb, hitting 7.57%, 7.5%. Guys, I looked on Chase and they have them as high as 8%. And so between looking at the fact that the mortgage rates continue to climb, guys, it has to be almost impossible for those that's in the market to buy a home to actually get one at an affordable rate. Imagine what the down payment has to be. Imagine all the things you guys are having to go through. In fact, I want to know how many of you guys are homeowners, but more importantly, how many of you are in the market looking for a home, whether that's acquiring another property or it's your first time going through. Because I have some individuals I'm close to that are, one is in the market for a home and they currently renting, and another has just bought a home upwards of $500,000. And again, you hear the stories surrounding the things that they're going through and how difficult the market is. Guys, it only makes sense. Check this out. Mortgage rates climbed for the 5th consecutive week Thursday, following the recent jobs and inflation reports that surged past forecasts and set expectations that decades high interest rates could stay higher for longer. The persistently higher mortgage rates are putting added strain on today's would-be home buyers, who are also confronting elevated home prices due to lack of inventory for home sales. The 30-year fixed rate mortgage averaged 7.5% in the week ending October 12th, up from 7.49% the week before, according to data from Freddie Mac. A year ago, the 30-year fixed rate was 6.92%. The last time rates were this high was in December of 2000. Guys, this is crazy, okay? And so again, rates are only going higher and higher, which is making it more difficult for those of you that are trying to acquire a home. Again, guys, avoid trying to buy a home right now at these rates if you can. Simply put, because again, your down payment of that 20% is going to be outrageous. Your monthly mortgage payment will have you most likely being house broke. That's something you want to avoid. I often say, don't have more money in the driveway than you have in the stock market, and definitely don't have so much of your money tied into your house, meaning your house broke, your house poor. You can't do anything because the monthly payment takes up all your income. Avoid those things and be aware of those things at all costs. And the last thing I want to talk to you guys about related to this is what they're doing to kind of suck you guys in and avoid this at all costs. And it's the 2-to-1 buy down program. Guys, if you hear any mortgage lender, any bank trying to get you to join this, please avoid this at all costs. This is a practice that, again, they're promising you things like, oh, 6 months from now, interest rates will be down. This won't be this high. Housing prices won't maintain these levels for long. Do this 2-to-1 buy down program and you will be okay in 6 to 9 months. No, guys, please avoid that at all costs. Don't fall for it, okay? Without further ado, I just want to put that on you guys. And again, be aware that interest rates are above 7.5% at this point in time, and right now is not the time to be trying to buy a home, okay? Now check this out, guys. I'm pulling up the chart. Class is in session. I want you to take a look at this. This is the 1-day chart of the SPY, and I often talk about the fact that the money is in the charts, okay? And so I want you to take your eyes to 3 levels that I want you to be mindful of this upcoming week, okay? At the 200 support level, you see 426.34. Where we're currently at is 431.50, and overhead resistance is at 436.59. Okay, if we lose this 430 level, guys, I want you to anticipate a trip down to that 426, 425 level. Okay, and then at support, I want you to expect a bounce. Okay, but you react to what you see. Don't get bullish until we clear resistance, which is at 436.59, around 437. Okay, so above 437, that will take us back to that 440 range. However, in the meantime, you will be within this range, so you are to play the range until they give us a definitive direction one way or the other, whether that's to the upside or downside. Guys, I'm putting this on you today. I'm gonna circle back next video and I'm gonna draw it out for you guys on setups I want you to be looking for so that you can come out the gate making money with the SPY first thing on Monday morning. Okay, speaking of SPY, I wanted to first look at the SQQQ. Okay, it is sitting up 3.7%, almost 4% on the day, and it is currently sitting here at a price of $19.41. So check this out, guys. You're gonna see a clear divergence with this. Look at this. Now look at the SPY. They look completely opposite. One is up, one is down. They are the inverse of each other, okay? And you can throw the QQQ in here as well, all right? The triple Qs will look just like the SPY. But I'm showing you this divergence because this SQQQ is reaching a top. $20 to $21 is the resistance level for that. So I don't want you guys to get trapped when you're in SPY thinking it's going to keep going down, down, down. No, it only got a little bit further to go down potentially before a reversal and a bounce happen. So I want you to be looking for a reversal candle. I want you to be looking for a bounce off support, because this can only go so much more higher before this comes back down as well. So if this goes down, the SPY, the Qs will go up. Don't get trapped thinking this going to keep going to $24, $25, and it ain't going that high. So you got to know you're getting close to a top here. If you're close to a top here, you're close to a bottom on the SPYs and the Qs, okay? And so a reversal could be imminent, but you got to be patient and you have to react, okay? Speaking of reacting, check out the SPY sitting at $430.50. This is a critical support level, okay? It was down 0.49% on the day, down a little bit more in after hours. Check this out, guys. Down here at 430, if we lose 430, if that level of support fails, because this is support, this is a key critical support level. If it fails, you know we are taking a trip down to 425, 426 range. I'm expecting a bounce there because that should also correlate with the SQQQ hitting 21, around 20 or $21, okay? So it all should line up, but from there, you should get a bounce. Now, if you don't get a bounce, okay, you adjust. Your stop loss should catch it, or you can pivot and ride it down, because if we lose 425, then we're coming down to retest that 420 level, okay? Guys, don't overcomplicate this game. Keep it simple, keep it short, keep it sweet, okay? Listen, guys, I wanted to put this on you. Upcoming this week, guys, we got a week that's gonna provide a lot of opportunities, and I wanna make sure you guys are locked, loaded, and ready to go. We'll dive more into this in our next video, so please stay tuned, okay? Listen, hopefully today's video was helpful. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.